Just because he's 16 years old and can dunk the ball, it doesn't make him the next LeBron James. Welcome back, mindful investors. In this video, I'm going to talk about my calling bullshit play. This is one of my favorite plays, but it's definitely not for everyone, because the risk can be unlimited while the reward is limited. But there are ways to mitigate the risk. I'll talk about that in a later video. The technical name for this play is the naked call, or the uncovered call, which means you're selling a call option without owning any of the shares. Before I get to my example, I need to lay a little bit of groundwork. For my example, it was a NIO bubble play. For those of you who don't know what NIO is a replica of Tesla. At its hype, they're labeled as the next game changer in the EV space, overtaking Tesla possibly. This is very similar to comparing that kid down the block who can dunk when they're 16 years old and LeBron James with 20-year track record. This kid right here, he promises that he can do everything that LeBron James can do, and more, in a quicker time frame. NIO was pretty much the same. They claim that they have self-driving technology that is better than Tesla's, something they developed for 10 plus years. And this battery swapping technology is going to take over the world. It's battery swapping. This technology is out of this world. There we go, it's done, swap. There we go. Thinking mindfully, what exactly do they have? They delivered 30 more vehicles last month. Great. If you really think about it, what hard assets do they have? They don't have a production facility, they don't have the technology to manufacture their own vehicles, they don't have the battery technology that's outsourced to CATL. What do they have? They have a battery swapping system, and I already showed you that technology. So what do they have? And then I looked around on YouTube. There were a whole bunch of these price projection videos. Some YouTubers were projecting that the stock would reach $100 next year, conservatively, and $250 plus in 5 years. These are just ridiculous projections. No one in the right mind would make these type of projections, but only on YouTube, because they're there to draw views. They don't care about your financial situation. They don't care about anything else but the views and the minutes watched. Sometimes I really question why I'm doing this on YouTube. I would never want to be associated to all this bullshit. Just think about it. They're pretty much saying the stock would double next year. Absolutely no true investor can say that this asset would double next year. Nobody. And they're saying it'll double conservatively. That's even worse. To me, that's just irresponsible, but that's just how YouTube works. People like the clickbaity, they like the hype, they like the 10x videos. Anyways, let's just talk about the option strategy I used. Let's go back to the 7-step process of the covered call strategy. Okay, so most of these are very similar. Picking which stock, that's exactly the same. But in this instance, we don't own any of the shares, so we don't care about the strike price greater than the cost. It's the exact same selling call scenario, so sell, call. And strike price, expiration date, option premiums are all the same. So as I said before, this naked call option is extremely risky because the downside could be infinite. So don't implement this strategy unless you know exactly what you're getting yourself into. Okay, now we have our NIO options here. We see that my average entry price right here is $4.74. I averaged into this position in November. So I bought around these levels that average around $4.74. And then we'll look at this date, November 12. November 11, 12, this area, the stock price was at $42. And then the stock price spiked a couple days in a row to a peak of $54. It slowly tapered back down. It peaked again here at $55, but then it slowly sold off about 20-30% to $43. So we'll go back and look at this play right here. So my entry price was here at about $470, and then it jumped to $970 within like a 2-day time frame. At that moment, my position was pretty much down 100%. So let's say if I sold my position for $1,000, I would be down $1,000, down 100%. But then my position was much bigger than that. I had 30 contracts, which has a cost basis of 14.2K. So essentially in that moment, I was down 14K in 2 days. But then all this tapered back down to the $5 levels. And then right now it went all the way back to the dollar levels. So my calling bullshit play currently has a profit of around 9.35K. The stock price itself is at $42 right now. If the stock doesn't jump 30+% in the next 3 weeks, then I capitalize on all my cost basis, which was 14.2K. Going back to the requirements, we have number 5, 6, and 7. For my covered calls, I was choosing number 7, the option premiums as a priority. But in this case, I put the strike price and the expiration as priority. I didn't pick something that's really close because anything can happen in the really short term, like what we saw in the stock price. The stock jumped from 42 to 55 within a 2-day time frame, a 30% gain in 2 days. And I kind of anticipated that this type of thing would happen with a volatile stock like this. So I put my expiration date 6 weeks away to December 24th. So I had 6 weeks to watch all this play out. Another reason why I picked the end of this year, because there are a lot of fund managers who own these speculative stocks that gained 10x plus in this year, they would want to capitalize on the gains and show it in their books. Because once it's in their books, they can say to their clients next year, look what I've done last year. I picked this 10x stock and made a killing on it. So that was one of my reasons why I projected this sell-off. And then for the strike price, I picked the $55 call because right here, this peak was at $54. What I was saying is that it wouldn't break through this peak by the end of the year. And of course, it broke through slightly by like $1. And that was the ultimate peak for this year, hopefully. And now we'll look at the Bitcoin chart. As we see, Bitcoin peaked in 2017 December at $19,000. At that point, there were people projecting that Bitcoin would hit $1 million in 5 years. That was very similar to all these YouTubers projecting a 5x gain in the next 3 to 5 years. All this hype on the street has driven me to make this play. So what do you think about this calling bullshit strategy? How many times have we seen this over the years? In 2017, there was a Bitcoin. In 2018, there was a weed bubble. Tilray went from $20 to $300 within a 1 month time frame. And then it tanked all the way to $1 this year. They're full of tricks in the stock market. And as we all know, tricks are only for kids. So don't fall for it. Let me know if you have any questions regarding this options play or any other questions regarding options. I'll be making these videos every single day for the month of December. Thanks for watching, take care, and I'll see you in the next one.